So several months ago, I did a Shark Tank React on this company called Proven Skincare. And at the time, I mentioned how it was a company that I actually met with and that we looked at briefly for potential investment. And at the time, like, it didn't fit because it was kind of too early for us and a little bit outside our scope. So nothing against them or the company or the founders or what they were doing. But fast forward to today, they are doing their own equity crowdfunding raise, and I came across their website where they are raising around, and so I just thought it would be interesting to see how the company's doing since their Shark Tank pitch, and go through and kind of give my commentary and thoughts about the company and how it's doing. As always with these videos, this is not investment advice and should not be construed as such. This is for entertainment and educational purposes only, but hopefully you learn something that can be useful in your own personal investment journey as you make your own investment decisions. All right, so just as a reminder, Proven had this unique model where they said, we are going to create personalized skincare products for customers based on their location and like the quality of like the water and the environment and the temperature and pollution, and also like their own personal needs and their like, you know, they claim like based on your genetics. I don't know if that's actually true because they don't actually do like genetic tests or anything like that. But at the end of the day, it was supposed to be like highly personalized skincare products. And, you know, generally I think it's a really interesting idea. Founders come from some top places like MIT. The CEO had a lot of experience doing private equity investing, so really sharp team, and you know, a lot of really cool things going for them. So let's dive in and let's see how they're doing. So this is the website. You can go check it out. It's investinproven.com. You can also go to their main website, which I think is just provenskincare.com. Provenskincare.com. Yeah, so let's see. They're raising, minimum investment is $990 and a share price of $660. I don't know what that means, right? And like, frankly, like nobody knows what that means just to have a general share price. What you really want to know is what's the value of the company, and the way you would generate that number is you would look at total number of outstanding shares and multiply that by the share price, which hopefully we can get enough data to do that. Become one of the fastest growing consumer brands with $37 million revenue run rate within the first 3 years of launch. Okay, $37 million revenue run rate, just to break that down, does not necessarily mean that they did $37 million in revenue or that they will do $37 million revenue run rate doesn't necessarily mean that they did $37 million in revenue or that they will do $37 million in revenue. It just means like at the point in time at which they took that data point, and if you took that and you multiplied it by 12, that would equate to a $37 million revenue. But as you can see in their chart, they have this kind of like weird thing going on where it's like high, low, high, low, high, low, high, and then probably low. And actually, if you look at May, it looks like it's pretty flat from March. So I don't know. Are they actually growing there? The other thing is that this is May of 2022, which is a year old. So yeah, I'm really curious how they're doing in May 2023. But it doesn't look like we have that much data. Just some other things that are interesting. So 137,000 customers since launch, $125 average order value, and then 80% of their customers are subscribers. Okay, well, you have to understand the business. The business is you sign up and it's like you can pay an outrageous fee, like $200, I think, or something like that, to order and not be a subscriber. Or you can sign up to be a subscriber and they like cut the price way down. Let's just like see what that is. So Proven Skincare. Yeah, so if you go through and you decide to buy the product, yeah, see if you're a subscriber, it's $129. Otherwise, it's $200. So that's how they get you, and it's 2 months of subscription. So you're paying $260 for 2 months versus $200 for 1 month. So I don't know. This 80%, like, here's the thing: if if they really had truly 80% of their customers were long-term subscribers for more than 2 months, like that would be super impressive. But I feel like they're gaming things just a little bit there. So something like to watch out for, right? The other thing is average order value of 125 is it's pretty good, all things considered. But keep in mind that it's $129 for like their basic package, which means that like the reason it's a little bit lower is because repeat customers are probably coming back and not buying all 3 things at once. They're probably buying like 1 or 2, and on occasion that's dropping it down just a little bit. Some patents and award-winning technology, AI Tech of the Year, and Deep Tech Inception Award winner. Like that's cool. Honestly, I don't think it really matters from the perspective it's these awards don't translate into revenue unless the actual underlying technology creates a product that's so much better than anything that's out there that consumers really like it and they keep coming back. Let's see. Repeat orders have grown significantly. So here's the thing. I'm looking at this, but I'm thinking as well, like the 2 months thing. Remember that? So like when I sign up and I pay $129, but I'm gonna have to pay for 2 months. Do they count that as a repeat purchase? Or in other words, right, if I'm paying $260 up front for 2 months, are they counting that as a repeat purchase for the second month even though I bought it once? Because that feels a little disingenuous. I would hope the way that it's really being calculated is I buy the product for 2 months for $260, and then next month I pay again another $130 for another month. But it's not clear if that's the case or not. They have 150,000 paying customers since inception, but not currently. So it would be interesting to know how many like current customers they have. Let's look at like some of their investors. So it's Y Combinator Company, which is the very best accelerator out there. So kudos to them for being a part of that. The flip side is Y Combinator has been letting in a lot of people, a lot of companies in the last few years. So, it's one of those things where it's like, it's good, but like just on its own, not good enough, if that makes sense. Let's see, they received money from SoftBank. Here's the thing, SoftBank right now is a little bit of a joke in the industry because they invested so much money at such high valuations that, their investment portfolio is really struggling. So on the one hand, super well-known, very large brand, made a ton of money on Alibaba. On the other hand, doesn't give you a ton of comfort. StartX is an accelerator that doesn't take equity out of Stanford, so that's why they have to say invest alongside top investors and accelerators, because it's not actually an investor. And Social Capital is Chamath, for any of my friends out there that like the All In podcast. That's his venture fund, Social Capital, and then Soma Capital is another small venture fund. That's it's good. So let's see, they're in the US and UK today. This is kind of confusing, but anyways, looks like they're in Europe. And then they've got their vending machine, tracking towards a $50 million run rate. Okay. Oh, and then if you invest, you get some of these bonuses, like 20% off subscription. I know, there you go. Let's see, what's the top perk? $25,000, and you get to invite yourself and a guest to Proven Major Investor Soiree alongside Proven's top-tier institutional investors. That's kind of a cool perk. How about $500,000 is a diamond? You and a guest spend a day in Bologna, Italy. Interesting. That's kind of fun. I don't know if that's worth like a $500K investment here, but usually when like my firm invests like $500,000 into a company, we're not getting like perks like that, like fly us out to Italy. So that's cool. That's a unique perk. All right, let's dive into the offering circular, which I think is like the most important doc to read. when making equity investments and like crowdfunding. Okay, so here we go. Okay, right off the bat, this is really interesting and definitely, I don't know if I'd say it's like necessarily a true red flag, but it is a flag. And that is that they are raising both preferred stock, but then common stockholders are selling. So if you invest $1, you can't really invest $1, but let's say you invested $1 into this company, 70 cents of your dollar would go to purchase Series A preferred stock, and then 30 cents of your dollar would go to buy common stock. The reason that's important is that preferred stock is going to get paid out before common stock is, so you have some downside protection. So that's one, and so you're getting this blend where it's like you're getting some downside protection, but not all the downside protection because a bunch of it's common stock. And the other flag is this company is still like pretty young to be selling secondary shares. Like, who's taking money off the table at this point? Like, what you would want is you would want to invest in founders that are in it for the long game, and they're swinging for the fences right alongside you. They're not looking to sell their equity stake now and take chips off the table. So, that just causes me pause. That said, you do see a lot of deals and companies that have done that over the last few years. I am going to forecast that CEOs and founders taking chips off the table this early in the game is going to become very, very rare in the foreseeable future because companies need to raise money and entrepreneurs don't have that much bargaining power anymore. Let's see. As of July of 2022, the company closed on gross proceeds of $1.6 million. Raised. So they've raised 1.65. I'm not exactly sure the total that they're trying to raise, but that's probably far short of what they were hoping for. Because it looks like proceeds they were hoping to raise closer to $60 million, which is a pretty big round. And here they talk about like Dalmore is representing them and the various expenses that they're going to have to pay Dalmore, which, that's all reasonable. All right, so here's the thing that I wanted to see. Plan of distribution. Selling security holders. Certain shareholders will sell up to this much in common stock and will receive proceeds of the offering equal to 18 million of all units. As of July, they've received 462,000. Okay. I'll agree to allow the company's CEO to vote their shares. Bummer. I was hoping that we could find out who was selling their shares. Oh, here that is. Selling stockholders. So it's the two founders are selling their shares, upwards of $9 million worth of stock. Honestly, like, this just doesn't, like, I don't always have something against entrepreneurs taking some chips off the table, but there's something about this that just doesn't quite feel right. I don't know what it is, but you kind of sometimes have to go off your gut on these types of things. I would hope that like Ming and Amy were like, no, we're not taking any chips off the table. This thing is going to be absolutely massive. We want to keep every single share that we own in this company. But, sometimes there are reasons for it. And so, maybe I'll give them the benefit of the doubt here. The other thing that I really want to look at here is here they talk about where they're going to spend the money. So sales and marketing, upwards of $10 million. Working capital, $7.7 million. International and new products expansion, $17 million. R&D, $5.3 million. I would have hoped that a little bit more of that would have been spent on marketing, because that's a lot in product development and R&D to be putting $24 million into that. At the end of the day, and maybe this is my bias, is that like consumer products companies are like good consumer products companies that do well are really like marketing companies first and product second. And so generally you want to see really good focus on marketing. Okay. Here you can see how much they've raised over time and who's invested. So they didn't talk about FJ Labs. FJ Labs is a pretty decent firm. That's kind of surprised. Mindset, Soma is in there. Cayman Emerge Accelerator Limited. It would be useful to spend some time going through and looking at all of these different investors and really understand what they're doing. I don't see some of the ones that they mentioned on the website in here, which is a little disconcerting and would require some additional digging. Series A does receive a 1x liquidation preference non-participating. So that's good. Preferred stock. All right, the thing I'm trying to find out here before I wrap up this video is what the valuation is that you're paying for. So maybe I missed. Here we go. Okay. So the total inclusion after this offering. So this would be the total number of shares of the company after they raise all of this money times the share price, giving you a valuation of $368.7 million. That feels really expensive. That's basically a 10x on the post-money valuation of the business, assuming that they're at $37 million run rate and that actually holds. I'll tell you right now, in this environment, consumer products companies are probably getting valued somewhere in the 1.5 to 3.5 revenue range with pretty good growth. So I don't know, 10x feels incredibly expensive. I think that's the kind of valuation you could have pushed for back in 2021, but today that feels really high. I would be anticipating a company like this coming in at a valuation that's closer to maybe on the high side, closer to 125 to 150. But 380, man, that's really high. You got to be a really strong believer that growth will continue, that growth is driven by subscribers that keep coming back every single month and just love the product. And that they have really good efficiency on their marketing. The other thing that we don't really have here is much around the way of financials to know how much they're burning in cash every month, and whether or not this money will give them enough runway to get to a point where they can either be large enough to be acquired or hit a certain milestone in order to raise another subsequent large round of funding. The other thing that I guess just doesn't feel super right about this whole thing, and again, this is not investment advice, these are just things and feelings that I'm having as I'm going through this after having done over 100 deals, is that I feel like this valuation is high, and they're taking chips off the table, and they're selling this to non-accredited investors, who I don't know if most non-accredited investors are spending the time to dig through this circular and really understand what is in here, because it's there's a lot of text. It can be really confusing. There's a lot of jargon in here, and if you don't know how to read it, you're going to miss out on things like this, like the valuation being almost $370 million. So I don't know, it feels like they're kind of taking advantage of unsophisticated investors, which I get the methodology there and why you might do that, because it's relatively affordable money to raise. But the flip side is it doesn't appear that they've raised a lot of money here. And, you know, I will admit that I might be missing something here. So if you see something that I did miss and you think Proven is super exciting, let me know down in the comments. I will say, like, I use the product. I like it. The product is really good. I've been really happy with it. I think the team is really sharp and really strong from that perspective. And I like their approach. It's more of a science-driven approach. And from a marketing perspective, I think that kind of plays. I also like the fact that the product is more gender neutral than a lot of other products, in that, like, I can use it and feel totally comfortable that it's not like super feminine as a guy. And so that's good. And I think that like a lot more men are going to become more and more interested in skincare products. So generally, I think like there's some like good trend and tailwinds behind them. So a lot of really interesting things, a lot of good things about this company, a lot of things that caused me a little bit of pause. But honestly, like any good deal is going to have red flags and have things that are going to cause you pause. You just have to be comfortable with those risks. Anyways, I hope this was helpful to you to see like how I would evaluate a consumer products company like Proven. Even though this isn't investment advice, I do hope that it is educational and that you've learned something that you can take away in your own investment journey. If you enjoyed this, check out my other video where I basically do the same thing on a company called Doughp, who is raising on WeFunder. Thanks.